Another week of precious metals price rigging to the downside news and revelations. And while this new article cites chart logs and derivative price discovery rigging facts going all the way back to 2009, if you regularly monitor precious metals derivative market trading now in the year 2021, it's not hard to believe high-frequency trading, chart painting, price declines are still not a regular, occurring, unprosecuted financial crime ongoing. Headline reads, Gold traders chat bragged about how easy it is to manipulate prices. July 22nd, 2021, Bloomberg News. Chat logs introduced as evidence by prosecutors at the Chicago spoofing trial of two former precious metals traders for Bank of America Corp's Merrill Lynch unit shows one of them, Edward Basis, bragging about how easy it is to manipulate prices. On January 28, 2009, when Basis was working at Deutsche Bank AG, he put out bids to buy 2,740 gold futures contracts valued at around $244 million over the course of 4.5 months, according to Maria Garibaldi, a vice president at Analysis Group who studied exchange and trading data for prosecutors. More than 98% were canceled without being filled, she said. On the opposite side of the market, a fellow Deutsche Bank trader Basis coordinated with sold his 170 contracts worth $15,172,500 as the price rose, Garibaldi told jurors on Wednesday. That does show you how easy it is to manipulate it sometimes, Basis wrote minutes after trading in a chat message sent to the other Deutsche Bank trader, Cedric Chenu, according to Garibaldi. Chenu and another Deutsche Bank trader, James Vorley, were sentenced last month to a year in prison each for their convictions in 2020 on spoofing charges at a separate trial. Quote, I F the market around a lot, Basis said in another message. Basis and fellow Merrill Lynch trader John Pasilio face federal fraud charges for allegedly spoofing the futures market from 2008 to 2014. Another episode described by Garibaldi involved trades by Basis and Pasilio on August 9, 2010, when both were working at Merrill Lynch. That day, Basis played an iceberg order to buy 10 contracts of platinum, with 6 being filled at placement, she said. Less than 10 seconds after Basis placed that buy order, Pasilio placed an order to sell 205 contracts for $15,836,750, which was almost 90% of what was visible on the exchange order book, Garibaldi said. The price went down, and the rest of Basis' orders were filled, she said. Less than a second later, Pasilio's sell order was canceled, she said. Garibaldi said employees at Analysis Group put in about 3,000 hours studying data in this case, and over the course of several years, billing the government $1.2 million for its work. The defense attorneys have not yet begun cross-examining Garibaldi. In opening arguments Tuesday, Basis' defense attorney told the jury that once her client understood spoofing was illegal, he stopped doing it, and that nearly all the conduct the government identified was before the enactment of the Dodd-Frank Act, which specifically prohibited spoofing. You might be wondering how such commodity market crimes could go on for handfuls of years, almost completely ignored by supposed financial market regulators. This and other alleged types of precious metals price discovery manipulating criminality was probably very profitable for the largest derivative commodity contract trading commercial banks. The following clip is an illustration by the History Channel of just how profitable inducing waterfall declining silver derivative price sell-offs could be in a very short time frame.
When it comes to buying large quantities of gold and silver, traders speak a language very few would recognize. Contracts, contangos, and coiling. Algorithms and spoofs. Just a few words to describe actions that can produce staggering profits. The bank is doing the robbing. It's no ordinary bank. It's a bullion bank, an international bank licensed to deal in gold and silver. Here's how it worked. Traders waited for most of the major markets from Shanghai to London to be closed. In New York, a gold and silver market called the COMEX was open, and this is where they concentrated their dealing. Trading anonymously, the players use what are called algorithmic trading systems to move in and out of futures contracts in the blink of an eye, 400 contracts a second. Each contract represents 5,000 ounces of silver.
Suddenly, someone gets the idea to sell nearly 45,000 contracts.
Such a massive wave of selling immediately drives the price of silver down. Investors, big and small, try to cut their losses and sell as the price drops. Anyone not in the game gets clobbered. Then, without warning, the mysterious seller reverses course and starts buying the electronic silver back. Once again, by massive buying on the electronic exchange, the trader dictates the price, making it go up and profits massively from the rise. The profit on each contract reaches $80,000. That's $80,000 times 45,000 contracts. $3,600 million.
Even now in 2021, high-frequency trading, price discovery chart painting in the precious metals markets still seems somewhat commonplace. Yet given the bullish bullion fundamentals that have been building over the last few years, it also appears the efforts to push precious metals prices down by the short trading powers that be are becoming less effective than they once were. Record-sized bullion sales volumes and growing precious metals investing interest may again be leading to another shortage of quickly available bullion bars and coins at reasonable prices and premiums above the fluctuating spot price markets. This week, we'll cover a bit on the case for a potential sell-off in precious metals spot prices over the short and near term. Hello there, on behalf of SDBullion.com, this is James Anderson with a quick SD Bullion market update. Before we go further, please smash the like button so other sound money stackers can also see this content. And be sure to subscribe to our SD Bullion channel so you can get our latest market coverages and also a chance at winning incredible bullion giveaways like this one.
Raise your hand if you like free stuff. We were going to give away a free tube of the brand new 2021 Silver Eagle coins. Then we said, nah, make it 25 tubes. SD Bullion is giving away a monster box of 2021 Silver Eagles. How many coins are in a monster box? Let's just say one lucky participant is going to be showing off their best celebratory dance moves with 500 shiny new silver bird friends. So head over to sdbullion.com/sweepstakes for your chance to win.
Click the link below to enter your chance at winning this 2021 SD Bullion Type 2 American Silver Eagle Coin Monster Box giveaway of 500 Silver Eagle coins. Official sweepstakes rules can be found at www.sdbullion.com/sweepstakes. Good luck to all of you who enter and for your chance to win. I'm on the road recording this SD Bullion market update on Friday morning, July 23rd, 2021. We shall see if by the end of the day, gold can finish the week above $1,800 an ounce and silver can close above $25 an ounce. The gold-silver ratio is rising, likely to finish this week's trading in the low 70s. Bearish technical traders are increasingly calling for the spot silver price to fall back to the low 20s, even potentially the high teens. Keep an eye on spot prices for price dip buying opportunities to come, and those of you out there looking to add to a prudent precious metals position, coming days and weeks of these summer doldrums for precious metals may be fully arriving with lower spot price points and buying opportunities. Meanwhile, the fundamental drivers for higher precious metal values, medium and long term, as higher inflation rates become normalized, and central banks continue near fully monetizing the bond markets, and highly negative real interest rates become obvious to anyone who bothers to look at it. Keeping precious metal values politely suppressed is unlikely to last very long, given these aforementioned bullish bullion factors that are building. Nearly doubling the fiat US dollar's monetary base in the last 20 months of time is going to have lasting inflationary and currency debasing effects. Physical precious metals bought on weakness should become precious stores of value to come. That's all for this week. As always, take great care of yourselves and those you love.
If you enjoyed this content, be sure to give our video a thumbs up. To keep getting bullion-related news and industry insights, be sure to subscribe to our channel. Finally, hit that alert button so you know when we publish fresh content. Give us your thoughts in the comments below. Let us know what you think and which topics you want to hear more about.